Hi, my name is Wong Chen Heng with method number 299277. Today I want to present my individual report, the determinants of Abu Dhabi Commercial Bank performance. The determinants use internal factor and external factor to determine the bank performance. The background of Abu Dhabi Commercial Bank is it founded in 1985, and it is a full-service commercial bank offering a wide range of products and services such as retail banking, wealth management, private banking, corporate banking, commercial banking, cash management, investment banking, corporate finance, foreign exchange, interest rate, and currency derivative, Islamic products, project finance, and property management services also provided by them. The problem statement is traditional banking structures are seriously threatened by the growing occurrence of digital disruption and the emergence of fintech business. The second one is ADCB also has additional difficulty due to the intricate geopolitical environment and the economic concern. The third one is concern about data privacy and cybersecurity also remain major issue in ADCB. And the last one is ADCB faces difficulties due to the changing regulatory environment and the growing compliance requirement. For the research objective, it is to determine the internal or company specific variables that can affect the performance of the ADCB. The second one is to identify the external or macroeconomic variables that can affect the performance of ADCB. And the last one is to assess ADCB performance under the effects of both internal and external elements. For the literature review, it has three parts. The first one is firm performance. The profitability is the connection between revenue and expenses of the business current efficiency, the company potential future development, and how the company manage its working capital by Moshe 2020. For the liquidity risk, according to Kumar and Yadav 2013, liquidity risk is the inability of a business to pay its debt on time without endangering its financial position. And the last one is market risk. Is defined as the possibility which a person or other corporation would experience losses as a result of factors that have an impact on the overall performance of investment in the financial market by Hayes 2021. The methodology is to investigate the connection between ADCB performance and its determinants. The data was chosen from the ADCB annual report from 2013 to 2023. The chosen data will be calculated to financial ratios like ROA, ROE, ACP, current ratio, and other ratio. The ratio will be analyzed through linear regression by using SPSS to generate descriptive statistic, correlation, model summary, and coefficient table. The profitability or return on equity is the dependent variable, and the internal factors, external factors, and internal and external factors are the independent variables. For the descriptive statistic, the study showed that the mean of the current ratio is 1.141, indicate that on average the company has enough asset to cover its short-term liability, while the standard deviation of 0.08 indicate that liquidity varies little among the companies. The mean of operational ratio under operational risk is 0.343, indicating that the business spent a large amount of its revenue on operating costs while maintaining a healthy profit margin. A low standard deviation of 0.022 suggests that the enterprise operation efficiency is considered. Other than that, under macroeconomic factors, the mean of the inflation rate is 1.51, which means that the macroeconomic situation is stable with minimal inflationary pressure. Significant variation in inflation may be brought on by outside economic shock or policy changes is indicated by a high standard deviation of 2.193. For the correlation with a p-value of 0.002, the, the results show a negative significant correlation between interest rate and current ratio, or the liquidity risk of ADCB. With a p-value of 0.021, the financial performance of ADCB or ROE is positively significant correlated with GDP growth. For the model summary, for the internal, with a R-square of 0.87 or 87%, the study demonstrates that only 6 of the 7 factors affected the liquidity risk or current ratio of ADCB based on the Model 1 table. Based on the Model 2 table, this is the external factors and the liquidity risk or current ratio of ADCB was influenced by each of the 5 variables with 99, 91% R-square of 0.906. For the internal and external factors, with an adjusted R-square of 0.99 or 99%, this study demonstrates that only 9 of the 12 factors affected the liquidity risk or current ratio of ADCB based on the Model 3 table. For coefficient, the Model 1 table showed that ROE, average correction period, operation ratio, operating margin, and CG index are not significant to current ratio due to the p-value bigger than 0.1. For the external, the Model 2 table showed that inflation rate, exchange rate, and GDP growth are not significant to current ratio due to the p-value bigger than 0.1. For the internal and external factors, based on the Model 3 table, with a p-value of 0.2333, it showed that the ROE is positively but not significantly correlated with the current ratio. With a p-value of 0.171, the interests show a negative and not significant relationship with the current ratio. For the conclusion, the performance of Abu Dhabi Commercial Bank is more significantly impacted by internal and external factors than by internal variable Model 1 and external variable Model 2 according to a considerable body of research. For the recommendation, bank framework for managing credit risk need to be much enhanced. Second one is ADCB should also aggressively diversify its loan portfolio across sector, industry, and geographical areas. And the last one is ADCB ought to improve its lending arrangement and oversight procedure. Thank you.